Here's something that might shock you. The most successful trader I know has never taken a single technical analysis course. He can barely read a candlestick chart. He doesn't know the difference between a hammer and a doji. Yet this guy's been profitable for 15 straight years without a single losing year. Meanwhile, I've met traders with PhDs in mathematics who can calculate complex derivatives in their heads, who've memorized every indicator on TradingView, who can spot patterns that would make a computer jealous. And they're broke, completely wiped out. So what's the difference? Today, I'm going to reveal why discipline will always beat talent in trading and how understanding this one concept can transform your entire approach to the markets. Let me start with the story that changed everything for me. 2 years ago, I was at a trading conference sitting next to this older gentleman. Quiet guy, didn't say much during the presentations. During the break, I struck up a conversation. Turns out he'd been trading for 30 years. Started with $5,000 in the 80s and had built it into an 8-figure portfolio. I was fascinated. I started asking him about his strategies, his indicators, his secret sauce. And you know what he told me? He said he uses nothing but support and resistance. That's it. No fancy algorithms, no proprietary software, no insider information. Just basic support and resistance levels that any beginner could learn in a weekend. I was confused. How could someone with such simple tools outperform traders with million-dollar setups and decades of education? That's when he said something that hit me like a truck. He looked me straight in the eyes and said, "Son, trading isn't about being smart. It's about being disciplined. I've seen geniuses blow up accounts because they couldn't follow their own rules. I've seen average traders become millionaires because they never deviated from their plan." ID. That conversation completely shifted my perspective on what it takes to succeed in this game. Because here's the uncomfortable truth that nobody wants to hear. The markets don't care about your IQ. They don't care about your education or your natural talent or how many books you've read. The markets only care about one thing. Can you stick to your rules when everything inside you is screaming to do the opposite? Think about it. How many times have you had the perfect setup? You analyzed the charts, you identified the pattern, you calculated your risk-reward ratio, everything looked textbook perfect. Then the moment you entered the trade, doubt started creeping in. Price moved against you slightly and suddenly you're second-guessing everything. Should you exit early? Should you move your stop loss? Should you add to the position? That internal battle you're fighting, that's not a technical problem. That's a discipline problem. The talented trader sees the same setup and thinks they can outsmart the market. They'll move their stop loss because they're convinced they can predict what happens next. They'll risk more than they should because they're confident in their analysis. They'll hold losing positions too long because their ego won't let them admit they're wrong. Every single one of these decisions feels logical in the moment, but collectively, they're account killers. The disciplined trader approaches that same setup completely differently. They have rules, clear, specific, non-negotiable rules. They know exactly where their stop loss goes before they enter the trade. They know exactly how much they're risking. They know exactly what conditions would make them exit the position. And here's the key part. When those conditions are met, they execute without hesitation. No second guessing, no emotional override. Just mechanical execution of a predetermined plan. This isn't just theory. The data backs this up completely. Studies show that roughly 70 to 80% of retail traders lose money consistently. Not because they lack intelligence or talent, but because they lack discipline. They can't stick to their own rules when the pressure is on. They let emotions drive their decisions instead of logic and planning. But here's where it gets really interesting. The profitable minority, the traders who consistently make money year after year, they're not necessarily the smartest people in the room. They're the most disciplined. They understand something that the majority of traders never grasp. Trading isn't about predicting the future. It's about managing probabilities and controlling risk. And you can't do either of those things without unwavering discipline. This is why discipline beats talent every single time in trading. Talent might help you identify opportunities, but discipline is what turns those opportunities into consistent profits. Let me share the most eye-opening example of this principle in action. Paul Tudor Jones. If you don't know who he is, he's one of the greatest hedge fund managers of all time. This guy averaged 19.5% annual returns for 25 consecutive years. 25 years without a single losing year. Think about that for a second. Through market crashes, recessions, boom cycles, geopolitical events, this man never had a down year. Now here's the kicker. Jones isn't some mathematical genius. He didn't graduate from MIT with a doctorate in quantitative finance. He's not running complex algorithms or using artificial intelligence to predict market movements. What makes him special is his obsession with discipline and risk management. He has one core philosophy that drives every single decision he makes. Defense over offense. Always. Jones learned this lesson the hard way early in his career. In his 20s, he made a massive cotton trade that went completely against him. Lost 60 to 70% of the money he was managing. Can you imagine? Most people would have quit right there. But instead of giving up, Jones used that devastating loss as his education. He realized that being right about market direction means nothing if you can't manage your risk properly. From that moment on, he completely rewired his approach to trading. Every morning, Jones assumes every single position he holds is wrong. Before he does anything else, he identifies exactly where his stop losses are going to be. He defines his maximum drawdown before he even thinks about potential profits. This isn't pessimism, this is pure discipline. During Black Monday in 1987, when the entire world was panicking and losing fortunes, Jones made $100 million in a single day. While talented traders were frozen by fear or trying to outsmart the crash, Jones executed his discipline plan flawlessly. He had prepared for this scenario. He knew exactly what to do because he had rules that eliminated emotional decision making. The difference between Jones and the countless talented traders who failed during that crash comes down to one thing. They trusted their intelligence. He trusted his system. They tried to predict what would happen next. He focused on controlling what he could control, which was his risk, and his response to different scenarios. That's the choice you face every single day as a trader. You can keep chasing the next strategy, the next indicator, the next piece of software that promises to unlock some hidden edge. Or you can do what the professionals do. Build a system you trust, create rules that protect your capital, and develop the discipline to execute those rules no matter what your emotions are telling you. The market doesn't reward the smartest trader. It rewards the most disciplined one.